Viant Technologies IPOing on the Nasdaq today. The stock set to price at $25 above the expected range. The ticker is DSP. We have the CEO joining us, co-founder at Viant Technology, Tim Vanderhook. Tim, great to have you here. Thank you for joining today.
Hi, Oliver. Great to be here. Thanks for having me.
Congratulations. You guys have a pretty interesting company. From what I've read, you are in part a family-owned business in many ways, you and your brothers, but you're also in a space right now that seems to be combining some very exciting stuff in software and a pressured industry, which is advertising. So first, introduce us and tell us what you do. What is people-based advertising?
Yeah, in our world, what are we? We are an advertising software company. We help marketers buy ads in really exciting environments like the iPhone, like connected television. But more importantly, marketers want to better understand what they're getting for their money. Our Adelphic software helps marketers electronically buy all of their ads, regardless of channel, and we provide reporting so they can understand what they're getting for their money.
So do you serve as a marketplace, as a medium of exchange of sorts, a connector, a broker?
No, we represent the buy side. So DSP, our ticker symbol, that stands for demand side platform. So we represent marketers like Activision, Nissan, many big companies out there looking to buy ads into connected TVs, mobile phones, digital billboards, linear TVs, all of these channels that they use to reach consumers. Our software electronically buys and reports on that. It's similar to, electronic trading for equities, very similar.
So what I'm trying to figure out to be very clear is if you are doing specifically bespoke kind of advertising campaigns and deliverables specifically for one client at a time, or if you are more what investors might know as like a trade desk, an algorithm, a marketplace where you just kind of click go and you give people access to it.
Yeah, very much like the trade desk. We compete with the trade desk every single day. They are also a DSP. They're a cookie-based DSP, relying on technology of the past. We're built for the future. It's called people-based advertising, not relying on cookie IDs issued by big tech. We focus more on helping the marketer identify those consumers wherever they may be, streaming or on their smartphone, and allow them to deliver an ad and then measure whether that customer actually purchases. In the world, in our world, cookies are going away, and investors clearly understood that we're built for the future, and we're excited about that.
So how do you know kind of that you're hitting the optimal result for a client? Is that something that is a major goal of the code? Because it seems like your value proposition here is one that is about more specific kind of targeted based on your client, as opposed to, if a client is an industrial stock or if a client is a consumer product, that I imagine they want to have a different type of advertising. They want to have a different audience. Is it more targeted based on client?
Well, I think in our world, targeting is crumbling. So cookies, by going away, our competitive platforms that are out there have a tough time actually targeting and measuring whether consumers responded to that. Our approach takes a different approach, what we call a people-based approach, where we don't sync on cookie IDs or device IDs issued by big tech. We focus more on the consumer. Your email address that you've given to a marketer, that marketer wants to reach you across various channels. So we don't use big tech identifiers. We help marketers reach the consumers who are already their customers and ones that look just like them. But what's different about us is the electronic platform that we provide marketers. Yes, we can do things differently, not using cookies, but more importantly, there's $100 billion transacted in the United States every year, not through software like ours today. And investors clearly understood that that's a huge market opportunity. There's room for many successful companies in this space, and we plan to be one.
So it sounds like your input factors here are a little bit different in terms of what information you're using to find the potential target for an advertisement. Is that kind of a fair way to describe it? You're using a different set of information and data that is more personal?
Yeah, well, we take a different approach. Our competitors focus on the e-commerce channel only. Why people-based is different than cookie-based is it gives a more holistic view to the marketer. With a people-based DSP, you can measure e-commerce just like our competitors can. But more importantly, these big marketers, the Fortune 500, where most of their revenues transacted in physical retail, our software does a better job at pulling that revenue in from the stores, pulling the revenue in from e-commerce, and telling the marketer which advertising programs are driving those results for them. The big difference of people-based versus cookie-based is that we're looking at the totality of the revenue of our customers rather than just the e-commerce channel like our competitors.
Got it. Okay, so you're trying to get a bigger sample set of the information to make those decisions on, it seems. Tim, right now, who are your big clients? Where does the revenue come from?
We have incredible clients. All major holding companies are clients, huge mid-market agencies that have been growing tremendously and winning lots of business, and clients directly. A lot of these direct-to-consumer businesses that have been created need to take this function in-house. And so they use our software to identify where their prospects may be and electronically buy and instantly understand what they're getting for their money. That's the Adelphic software in a nutshell. It's electronic buying and reporting of advertising.
Tim, what are the plans now that you're public? Obviously, you'll have an influx of spending ability. Do you want to spend? Do you need to? And where does the money go? What's the priority this year?
Yeah, first things first is capitalizing on this huge market opportunity. We're investing a tremendous amount of money in sales and marketing. That's really about what was strengthening our balance sheet to give us the confidence to grow our team and ultimately grow our business. So a big chunk of the money is just going after that market opportunity, organically growing the team to capitalize on all these conversations we're having. There's a big need out in the market for this shift away from cookies, and Viant Technology is leading that way. So we're excited to go public today. It's been a childhood dream of myself and Chris since we started this business. I was 18 years old when I started it. I'm 39 today, so to be able to step out, finally make it to the public markets, we're really excited about where we can take this company in the future.
Tim, for the plans on the spending side, what does that mean for the bottom line? If there's going to be CapEx and expansion for a sales team involved, is the priority here for revenue? Should we be looking for profitability gains over the next year, or is that secondary?
Yeah, for 2021, we want to make an investment cycle into the business, really just to go over that, like I mentioned, the organic opportunity that we see where marketers are looking to a solution to this cookie problem going away. So I would say sales and marketing investment will drive our expenses up a little bit, but investors have seen historically our level of profitability and the top line growth. In 2019, we achieved over 60% growth and had great profitability that year. We expect to grow both over the long term.
Hey, Tim, just to clarify on one thing here, because it seems the case that you're making for your product is accomplishing something differently, the cookies versus the people-based. It seems like in addition to an overall market that you want to attack, you also want to get the customers and attack the market of your competitors. Should we be looking for Viant to be taking that market share away from competitors?
Absolutely. We've been doing it all the way till leading up to where we are. We're one of the most successful DSPs over the past 2 years. And really, it's because of the transition away from that cookie-based technology into something else. We launched this approach in 2015, and marketers have been rewarding us for our leadership over the past couple of years, and we expect to extend that lead in the people-based category. Okay,
Tim, before I let you go, I'd be remiss if I didn't ask you about MySpace. You guys still own it, right? What are you doing with MySpace?
Yeah, it's not relevant to the story of Viant Technology today. We currently are the stewards of MySpace, absolutely. We love that brand. We've been holding on to it for quite some time, but it's not important to our overall story. It's an asset we own, but we're excited about this opportunity in advertising technology. And I'm sure MySpace, something will surface itself there with what the right thing to do with MySpace is. Okay. But yes, you are correct. We are the owners of MySpace. The proud owners of MySpace, and we'll hold on to it until we figure out what the right thing to do with it, that asset is.
Okay. I don't know about the revenue potential for it, but certainly has some nostalgia qualities, definitely. Tim, thanks for being here with us. Really interesting stuff, and looking forward to following your guys' transition to the public markets here.
Thanks for having me today, Oliver. Very excited, and thank you to the Viant team for all your hard work getting us here.
Appreciate it. Tim Vanderhook, co-founder and CEO at Viant Technology.